Hello, my fellow market hackers. Thank you for taking that leap of faith and checking out what we got going on here. Market hacking. Now that you've already paid the whopping fee to watch this video, I can actually tell you the truth and tell you how excited and how awesome I think this is. Uh, in the beginning, it's super hard to sell or promote this because it is so much better than I can say in an advertisement or anything to that effect, just because it works so well. If I told you what I really think of this, everybody would just call baloney on me. All right. But you're going to about to find out how much this can change your life if you don't know it. It changed mine. All right, let's just jump right in. It's how to win on every trade. Yes, we can say that now. You should win on every single trade. All right, here's our disclaimer. Got to have this so we don't get sued. All information and content on this website, from this website, or the Market Hacking LLC should be viewed as educational only. This is not advice, folks. This is a strategy that we use successfully over and over and over, but things happen in the world. Okay. The author Market Hacking LLC and its contributors believe that this information and contents are accurate, but we neither guarantee their accuracy nor assume any liability for errors. If you screw up, don't blame us. The concepts and methods introduced should be used to stimulate intelligent trading decisions. Any mention of profit should be considered hypothetical and may not reflect slippage, liquidity, and fees in live trading. Unless otherwise stated, all illustrations are made with the benefit of hindsight. Yes, we learn from these things over and over, but we learn from years of doing it. There is a risk to loss as well as profit in trading. It should not be presumed that the methods presented on this website from the mental material obtained from this website in any manner will be profitable or that they will not result in losses. Past performance do not guarantee future results. Boom, that's the most important thing. Past performances do not guarantee future results. It is a responsibility of each trader to determine their own financial suitability. Market Hacking LLC cannot be held responsible for any direct and indirect losses incurred by applying any of the information obtained here. All right, that's the legal jargon. You know there are people that are going to mess this up. Here we go. We got that out of the way. All right, what to expect from this presentation. This is the word I'm going to use a ton. How to win on every trade using Contango. We're going to explain what Contango is and its effects on ETFs. For the newbies, what are ETFs? We're also going to explain what they are and how they can be significantly flawed. What is the VIX? What does it mean for us? How do we actually trade these ETFs and how often? Why this strategy is better than anything on the planet that we know of. What can this strategy mean for others? Disclaimer again, nothing in this presentation should be construed as advice. This is a publication and you need to do your own research regarding all information provided. All right, what is our strategy? All right, we trade certain ETFs and ETNs that suffer and or take advantage of contango slash roll yield. First, we need to talk about what contango and roll yield are. Contango is a situation where the futures price of a commodity is higher than the spot price. Contango usually occurs when an asset price is expected to rise over time. That results in an upward sloping forward curve. Roll yield, basically the same thing. We use these interchangeably, and you just have to hear the definition real quick. Roll yield is a type of return in commodity futures investing. It is driven by the difference between the price of shorter dated, closer to maturity commodity contracts and their longer dated counterparts. Basically, this means that the future price of a commodity or contracts are more expensive than the present. All right, so I'm going to try to give an analogy here and explain what contango is on these things. All right, so imagine that you're on top of a mountain, right? And you have a 150-pound backpack on your back because you've been camping. And as you go downhill, it hurries you up. It's weight on your shoulders. It's hard to get off. And every step you take, it feels like that bag keeps getting heavier and heavier and heavier. Well, that backpack is kind of like contango on some of these ETFs. All right. So basically, what the ETFs we're going to give you, some take advantage and some get hurt by contango. But if you can imagine that backpack being contango, some of these ETFs always want to go to zero. No matter what they're trying to follow, they want to go to zero. And the other ones are just the opposite. They want to go up forever. They just don't go up as fast. All right, so what is an ETF and ETN for my newbies out there? They are exchange traded funds. There's thousands of these bad boys. Exchange traded notes or the ETNs. They try to mimic the underlying security like oil. The owner of these ETFs often buys and sells future options contracts to mimic the price action. That's the most important thing from the slide you want to know is they're usually a basket of something. And when the owners like Barclays or one of these companies that owns these ETFs, to mimic the price of whatever their underlying commodity or basket is, they often use options for this. And that's where contango and roll yield really come into effect, is when they're doing that. All right. What does contango and roll yield have to do with an ETN, and how does this benefit us? All right, because the future is always more uncertain than the present, futures contracts are generally more expensive than the present. Because the owners of some of these instruments have to buy them regardless of how expensive they are, they often lose money over the long run. Okay? But the owner of these ETFs aren't going to take that loss in their personal wallet, period. So they roll these losses into the price of the ETFs or ETNs. Okay? So these ETFs become predictable over the long run. More than predictable, they become transparent and obvious. Once you understand the exact direction of a stock, you can make money off of that, right? So if you take out the fact that we're trading ETNs, let's just say we're using Tesla, for example. What if you knew 5 years ago Tesla would be $860? Well, every time you bought it, let's say you bought it in the hundreds, right? And it went against you. Well, you could feel good about it. You'd be like, oh, I just got to wait this out because I know it's going to eventually go to 860. Okay, that's the kind of security we're talking about here. We don't have to time it perfectly. If you pick the stock, it doesn't matter. You know exactly where it's going before it went there, and you can make a killing. Just like if we knew for a fact Tesla was going to be $860 5 years ago, every time we bought it at 100 and we were down a little bit, we wouldn't fret. Okay. All right. So if you knew that a stock would lose 20% over the course of a month, you would trade it, yes? So knowing that these certain ETFs and ETNs are going to lose money over the long run, you can bet against them. Or on the converse, some of them, when they gain money, there's some that increase in value, and we can do the same thing. We can buy them knowing that they're going to go back up or go up further than they were to begin with. It's like having insider information, but completely legal, because it's not insider, right? It's just information that we're giving you right now. Anybody that does the research on this, or is unlucky enough to find out the hard way like me, can find out this information. That's why it's not insider information. It's just that not that many people know about it. All right. How big a deal is this information? Let's compare it to insider information just so you guys can really grasp how big a deal this is. Because when I first started doing this, nobody understood it. They put these ETFs together, and you had to dig through and read through their prospectuses and really try to understand what it was. All right, so insider trading is the illegal practice of trading on stock exchange to one's own advantage through having access to confidential information. That's the only difference between what we're doing and insider information. We know where a stock is going to go, but it's not confidential. The vast majority of traders on the planet don't understand the effect of contango or roll yield on some of these ETFs. That's not our fault. The information is out there. But you will, we do. Is it unfair? A little bit. But like, for example, I'm one of those people. I figured this out myself through an instrument called VXX. I was long this thing in 2014, I believe. Don't quote me on that, but I remember there was a budget problem when Obama was president, and I knew they weren't going to get a budget on time, that they were going to kick it down the road, and both sides, Republican and Democrats, were going to argue, and they were going to hit their target. They didn't hit their target, and everybody freaked out. The VIX popped. I went long it. I was right about it. I still lost money. I'll explain, but that's how I learned how this stuff works. I'm going to go back to insider trading on this. This is because it is seen as unfair to other investors who do not have access to the information, as the investor with the insider information could possibly make a larger profits than typical investors could make. Okay, so we're right back to this. Everybody has access to this information. Not everybody understands it. Not enough people actually do their research. We did the research for you. We're going to explain this stuff to you. All right, here's UVXY, one of my absolute favorites. If you look, this is a 5-year chart, I believe, of this, and you can see that at some point it had to have been $4,000 per share. It never really was $4,000 per share, people, but you can see the effect of Contango over the long run. This thing always wants to lose money. It always wants to go to zero. It would go to zero if they didn't keep reverse splitting it. But this isn't even a great chart. It looks way worse than this. Okay, that's just how it goes, especially in a bull market like we had before. This thing just wants to go to zero at all times, and they have to keep reverse splitting these things over and over and over. Here's one that increases. This is SVXY, and you can see on here how it has dips, but it always wants to go higher. It doesn't necessarily mean that the market has to go higher. It just goes up faster when the markets do. But every pullback, every dip to us is just a buying opportunity. Because we know, because of Contango, this thing wants to go up. All right. So I hope you guys I'm going to take a quick breath. I talked kind of fast because I love this stuff and I get excited about it. I hope you're getting excited too. I hope you understand the gravity. I know this is the cheesy dollar sign thing or pile of money here, but this is how important this is. This is better than anything I've ever done. I used to trade oil. I did tons and tons of research. I've traded, I was one of the people that predicted Pandora Radio would fall and collapse like they did. Nothing I've ever done has made me as much money as take advantage of Contango and roll yield, because it's so predictable. All right, so let's sum it up. We trade ETFs and ETNs that suffer and gain from Contango/roll yield. Contango and roll yield make ETFs 100% predictable. We don't ever have to lose on a single trade. It is similar to knowing for a fact that our favorite stock, we use Tesla, will go up or down a certain percentage in a specific time frame. This is how millionaires are made, people. You understand this? This is awesome stuff. If you didn't know how to do this stuff, if you didn't understand this stuff, you should be getting excited right now. If they are good enough to project the stock's jump, they buy the stock before it does. If they're good enough to know it's going to go down, they'll short it to make money. That's the hack. Now let's take this hack to the next level. What is the VIX? All right. So I've already kind of briefly mentioned a few ETFs that suffer from roll yield. The ones that I mentioned in particular try to track the VIX. What is the VIX? The VIX is my favorite thing. It is the CBOE Volatility Index, a popular measure of the stock market's expectations of volatility based on the S&P 500 index options. It is calculated and disseminated on a real-time basis by the CBOE. It is often referred to as the fear index or fear gauge. All right, so the VIX is actually not a stock. You can actually buy and sell options on it, but it isn't a stock. You can't just buy it. Like I can't just go buy in this particular image, it's $32. I can't just go buy shares of VIX, okay? In order to try and track it, if I want to trade the VIX, I have to buy it through these ETFs that we're mentioning. The cool thing about the VIX, though, is it does not suffer from any type of roll yield, simply because all it does is reflect those options that we mentioned. Okay. So let's say there's a bunch of, let's use Bank of America as an example. Let's say you were a big money manager on the East Coast and you had $2 million of Bank of America and you wanted to protect your portfolio with puts because you were worried that the stock market might take a dip or something. So you bought some puts. The more you're willing to pay for that protection, the higher the VIX will go. So the scarier things are in markets, the more you'll pay for those puts, the higher the VIX goes. Hope that makes sense. That's all it is. It measures the amount of protection you are willing to pay, or not you particularly, but the market is willing to pay for protecting their portfolios. Said differently, the VIX is like the heart rate of the markets. When market investors are scared that the market might drop, the VIX goes up. This usually happens when markets are selling off, like with the Russian scare. I can name a zillion scares. The biggest jump I've seen since the Great Recession was when the pandemic hit and we basically went on lockdown. The VIX shot up, and depending on which chart you were looking at, some show that it went up to 90. When those same investors are not scared, the VIX goes down. So when everybody realized that, all right, we're going to come out of the pandemic, we're going to actually start opening up businesses, the VIX came back down. This usually happens when markets are rising or are flat. Why do we love the VIX? Because it is the only instrument in all of the markets that has a top and a bottom, and we can predict it. Unlike stocks, like for example, let's bring out Tesla again. Let's say you're like me, and you know, this is not an argument. I never thought Tesla was worth anywhere near what they're worth right now. I really never did. I thought they were overvalued at $40 per share. I never shorted it. But had I shorted it and it went up to 860, I lose way more money than I originally invested by shorting it. With the VIX, it has a top. It can't just keep going to 860. All right, it's capped. Same at the bottom though. It can only go so low because at some point people are going to be like, "Oh, protection is too cheap. I have to protect my portfolio." So they'll buy it up. Let's say it's 14 or 15. People are like, "All right, this is super cheap to protect my Bank of America. So I'm going to buy some puts just because it's incredibly cheap to do so, and I'm covered if anything happens." All right, so it's all about predictability. If we know that the VIX is capped, and we know that some of these ETFs and ETNs that are trying to mimic, we know for certainty that there's a top when things go bad. For just example, uh, this Russia-Ukraine invasion thing, VIX went all the way up to 36 or $37. Okay, that's a good opportunity for us. We see that as, all right, people are scared out of their minds right now. They think there's a slight chance of World War III, whatever you want to say. I shouldn't even say slight. I understand it was kind of scary, but you understand the premise of this. We could short those tops when it jumps. And we know if we don't time it perfectly, let's say we get in at 36 or 37 and we start shorting these ETFs or going long them and the VIX keeps going. Let's say it goes to 40. Well, we're upside down $3, which is over 10%. And is it over 10%? You know what I'm saying. Let's say it's 370 just to make it 10%. And we short these things, but it goes up to 40 and we're down 10% at that point. We're underwater, but we know that the VIX has to come back down. So it gives us that comfort of, all right, we know we got in too early, but we don't have to get out and take our loss. We can just wait for it to come back down. Now the VIX is at 25. All right, so that's it. That's the most important market hacks you will ever learn, at least from us. We can predict that the VIX has a top, so we short it often. It has to what we call revert to a mean. And we have contango/roll yield that help it along. So like example, let's say we're shorting UVXY. We know that thing's going to lose over the long run regardless. So we'll short that sucker as the VIX comes back down. Contango and roll yield make it go faster, make us more money. All right, so here's the trade. We short ETFs like UVXY when the market volatility jumps. Or we feel like contango is strong enough that they'll lose money regardless, UVXY that is. On the converse, we also go long SVXY when markets are good. Okay, SVXY is one that actually goes up from contango I showed you SVXY's chart not too long ago. All right, so here is the actual VIX to the right, and I want you to see the spikes here. Every spike we see there, we look at as an opportunity. Again, we're not always perfect on our timing. Sometimes it goes negative on us, but if we're in the ballpark, we know that that sucker is going to come back to us and we're going to make that money back. And again, it doesn't need the market to go up, 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 up every single day for this to work. We just need it to calm down after those spikes. The VIX always reverts to a mean. Now that mean changes over time. As you can see in July, it was going down to 15. That now lately, $20 has been that new mean. Okay. So you have to pay attention. You can't fall in love with these things. You have to trade them, but you have to pay attention. Try to short the peaks. Try to go long SVXY these peaks. Eventually, remember, the protection becomes too expensive no matter what's going on, and it no longer becomes cost effective for the people that are protecting. So let's bring back that Bank of America example I showed you or talked about. Let's say that person has $2 million of Bank of America, and at first the puts were like, I don't know, let's say $2 per contract when everything was normal. Then we had this huge thing go on in Russia. Let's say those puts went up to $6. Well, because every one is worth 100, every contract is 100 shares, it becomes cost prohibitive. And at some point, even if they're buying protection, it's too expensive to buy that protection. And that's where, again, we get those peaks, even when things are scary. All right, bottom line, we short these VIX, ETFs, and ETNs over and over and over. Or we go long SVXY for the same effect. Between the VIX having a top, unlike regular stocks and commodities, and the future and the fact that these ETFs suffer from contango, we don't ever have to lose a trade. This market hack is valuable, as valuable to us as insider trading. We use this knowledge to our advantage to make money, and you can too. All right, so I know I just threw a lot at you. We're looking at the 23-minute mark, but I hope you kind of get how huge a deal this is and feel like you've gotten your money's worth out of it. If you don't, I totally understand. You can email us. I'll have an email right below this. If you don't feel like this was beneficial to you, just email us. We'll give you your money back. Okay? No questions asked. I want people to love this. I want you to tell other people, hey, check this out. Check out markethacking.com. And this is how awesome this is. If you understand everything we just put in front of you, you know how valuable it is. Happy trading. Go make that money. We love you. Virtual high five to you. Now, for those of you who are probably super excited, understand or get the overall grasp of it, like I did in the very beginning, but didn't understand it. Felt like it was a little bit of German. I didn't even understand contango when I first started trying to do this stuff. I had to really try to dig in and get a good grasp of it. It could be like learning a new language like German or something. You have options. We put some links to the right and to the bottom. You can upgrade, do a call with us, one of our market hacking experts, and we'll go through it. It can't be advice. We can't tell you what you should do. We can tell you what you can do. We can explain it further, whatever you want. Got a Zoom meeting. We can do it for an hour. Usually it doesn't take a full hour, but you get the premise. Those are for people that have questions. Okay, you can upgrade to that coaching call with the buttons. But regardless, thank you for taking this pill, the blue pill. We hope you kill it out there. We hope you can, at the very minimum, use this as part of your trading strategy. Maybe you're going to stick with trading Tesla and Bitcoin or whatever it is, but this can be a part of what you do to balance out potential losses and other things. Whatever you want to do, this is completely up to you. It's not advice. What we're doing is we're giving you a tool to put in your toolbox. It can be, you can change it to your only tool like us. You can do it as a part of it. You can completely ignore it. Whatever you want to do, now you have that in your box. All right. Thank you guys so much. I hope you love this. I hope you're as excited as I am about it. If you want to book a call, feel free. And I know $250 is not chump change, but I think a call with us is worth a lot more than $250, and I would have happily paid $250 to understand this in the beginning. But anyways, Go out there, kill it. I wish you all the luck in the world. Take care, guys.